Hello everyone, welcome back to our channel. In this video, we will quickly explain the objectives of management accounting. We will also give you the real life examples to make things super clear. Let's get started. What is management accounting? Management accounting is all about helping business managers make better decisions using data. Unlike financial accounting, which is for outsiders like investors, management accounting is used internally by the company. The first objective is planning. It helps businesses plan for the future, like setting sales target, estimated cost, and preparing budget. For example, a restaurant plans how many staff members it needs during the holiday season by analyzing last year's data. Second is controlling. It means checking if things are going as planned and fixed if they are not. For example, if a factory's electricity bill suddenly increases, management accounting helps find out why and what actions to take. Third is decision making. It provides the data managers need to choose the best option. For example, a small business wants to launch a product. Management accounting helps to compare the cost and expected profit to decide if it's a good idea. Fourth is performance evaluation. This means checking how well employees, departments, and products are doing. For example, company compare the sales made by two different stores to see which one is performing better. Last but not least, cost control. This involves finding the best way to control and reduce the business cost. For example, a delivery company tracked the fuel usage for its trucks and switched to fuel efficiency routes to save money. So those were the top 5 objectives of management accounting: planning, controlling, decision making, performance evaluation, and cost controlling with real life examples. If you found this video helpful, please like, share, and drop your comments. For more updates, don't forget to subscribe our channel.